In the next few hours, one man's decision will determine whether millions of dollars flood into Bitcoin or whether we see a brutal market crash. And here's the thing, nobody knows which way it's going to go. The Federal Reserve is meeting today. For the first time in years, there's a new Fed chair at the helm, and the crypto market is watching so closely that traders have been liquidating positions all night just to stay safe. $500 million in liquidations in the last 24 hours alone. But before we get into what that means, you need to understand why today matters more than any other day this month. Welcome back to the channel, where we cut through the noise and give you real analysis, real levels, and real context every single day. Look, markets hate uncertainty. They absolutely despise it. But uncertainty is exactly what we're dealing with right now. Kevin Warsh is leading his first FOMC meeting as the new Federal Reserve Chairman. And this isn't just some routine announcement. This is the moment that crypto traders, stock investors, and institutional money are all holding their breath for. Because the Fed's decision today will either confirm that the worst is behind us, or it could trigger the next wave of selling that we've been worried about since spring. What makes today so different from last month is a context. We just watched the US and Iran announce a peace deal. Oil prices tanked. Risk came flooding back into the market. Bitcoin jumped above $66,000. Ethereum rallied double digits. And altcoins, some of them are up 20, 30, even 100%. But here's the uncomfortable truth that nobody wants to say out loud. All of that momentum could evaporate in the next 2 hours. Let me take you back to understand how we got here, because this story didn't start today. It started with the Bank of Japan. Just days ago, they did something they hadn't done since 1995. They raised interest rates. And when the Bank of Japan raises rates after being dovish for 3 decades, it sends a signal around the world. It says liquidity is tightening. It says central banks are moving in sync. And for crypto, which is hypersensitive to liquidity conditions, that's huge. Think about what happened next. The crypto market saw that rate hike coming, and instead of panicking, it did something unexpected. It rallied, Bitcoin surged, Ethereum broke higher. But here's where the story gets interesting, and this is where most people miss the real tension in the market. The liquidation data tells a story that price alone doesn't capture. In the last 24 hours, we've seen $536 million get liquidated. That's massive, but notice which direction those liquidations are flowing. 3/4 of them, $375 million, are coming from short positions. That means traders who bet against the market are getting wiped out. That means the people who were expecting a crash are losing money while the bulls are printing profits. But here's the problem. When you have that much money being extracted from traders betting on decline, you're creating a fragile situation. It's a house of cards built on the belief that the Fed is going to keep rates where they are. If Kevin Warsh suggests even the slightest chance of more rate hikes, those liquidations reverse in the other direction, and suddenly, everyone who just made money is scrambling to exit positions before the market turns against them. This is where it gets dangerous. The market has priced in a very specific scenario for today's Fed decision. It's assuming that inflation is cooling enough, that geopolitical tensions are easing enough, and that the Fed is basically done raising rates. But what if they're wrong? What if Kevin Warsh comes out today and even hints that rates might stay higher for longer? Look at the altcoin space as an example of how fragile sentiment really is. JTO, JTO, is up 28% because the market thinks crypto is about to explode. Solana broke above $75. But these tokens are the first to crash when confidence breaks. They're the canary in the coal mine. And they're moving on hope, not on fundamentals. They're moving on the assumption that today's Fed meeting is going to be friendly to risk assets. SpaceX just had the biggest IPO in history. Tokenized versions of SpaceX stock are trading on Solana. There's so much euphoria in the market right now, so much confidence that the hard part is behind us, that if today's announcement doesn't deliver the goods, we could see a shakeout that clears out all the weak hands. Here's what's really happening underneath all this price action. The market is engaged in a high-stakes bet. Institutions are sitting on their largest stock overweight position in 4 years. Cash reserves have fallen to levels that historically signal that institutional money is fully deployed with nowhere to hide. If the Fed disappoints today, there's no cash on the sidelines to stabilize the market. There's no dry powder. It's all in. And that's exactly when crashes happen. But let's talk about what could actually save this situation. Because there is a path forward where today actually goes well. Bitcoin has been showing technical strength. It broke above 66,000. Ethereum is starting to accelerate. Solana has that golden cross forming that historically precedes significant rallies. These aren't small moves. These are the kinds of technical formations that suggest there's real institutional accumulation happening, not just retail FOMO. The SpaceX IPO created a narrative catalyst. When you have a company valued at nearly $3 trillion going public, and crypto rails are supporting tokenized shares, it sends a message. It tells the market that digital assets matter. It tells institutional investors that blockchain infrastructure is critical. And it removes the narrative risk that cryptocurrency is somehow dying or irrelevant. Plus, there's the geopolitical backdrop that we can't ignore. The US-Iran peace deal is real. Oil prices fell 2%. That removes a major tail risk from the market. It means traders don't have to price in a surprise energy crisis. It means the Fed can focus on inflation and employment without worrying about geopolitical shocks that could spike energy prices and create stagflation. That's actually bullish for cryptocurrencies because it removes one of the biggest wildcards. So right now, we're in this moment where there's real evidence that the worst might actually be behind us, but it's not confirmed. It's not locked in. It's contingent on Kevin Warsh saying the right things at the right time. Here's the turning point that nobody's talking about. The Fed meeting today isn't just about what they announce, it's about what they signal for the future. Are rates staying at 5.5% forever? Is that the new baseline? Or are they actually hinting at cuts later in the year? The market needs clarity. And that clarity either comes as relief, which triggers a rally, or it comes as a shock, which triggers a sell-off. $50 billion worth of crypto positions are on the line today. Not because traders are reckless, but because the Fed controls the environment that determines whether crypto is a safe haven or a risk asset that needs to be sold. In times of uncertainty, crypto is dumped. In times of confidence, crypto explodes higher. This is the inflection point. This is the moment. Today's announcement will either confirm that we're entering a new bull phase, or it will confirm that the rally we've seen since the Iran peace deal is just a dead cat bounce. Everything you've seen in the last 48 hours in Bitcoin and altcoins, all of it is contingent on this one meeting. In 2 hours, the announcement comes, and in the minute after it drops, more money will move through crypto markets than usually moves in a full week. Traders who've been sitting on the sidelines will flood in. Positions will be liquidated. New trends will begin. The question is which direction. If the Fed is dovish, if they signal that lower rates are coming, Bitcoin will spike towards 68, 70, maybe $72,000 by the end of the day. Ethereum will test 1,900. And every altcoin will explode because leverage traders will see the confirmation they've been waiting for. But if the Fed takes a harder stance, if they suggest rates stay high longer, you'll see liquidations cascade. That fragile momentum we've been building will vanish fast. The truth is, we won't have to wait long to find out which scenario plays out. The FOMC announcement is coming today. And whatever Kevin Warsh says in those first few sentences will reverberate through every market on Earth for the next 3 months. This is where the story turns. This is where the next chapter of the crypto and stock market narrative gets written. So if you haven't already positioned yourself for today's volatility, now's the time to check your portfolio. Look at your stop losses. Make sure you're ready for either outcome, because in a few hours, we'll know. The decision is coming, and markets will move. Stay sharp, stay ready. We're about to find out what comes next.